Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of the Chicago soybean complex.
Chicago soybeans. 13 weeks ago I highlighted a bright pink July 24 to date rectangle pattern, currently 955 to 1097. Now this pattern is still operational even now. The top side for this pattern is also capped by the nearby 50% Fibonacci line of the May to August 24 move at 1098 and the 61.8% absolute Fibonacci line at 1106. The market has over late April and early May tried to stabilize over the November 2020 low at 1045 and looked like it might try higher, but this week we have seen prices push back down below it, pressing down through today through the medium moving average currently at 1043 and the short medium moving average currently 1041. Now we have congestion below at 1033, but further down is the slowly rising long moving average currently at 1024, which I suspect may be the next level to be tested, as below this we only have congestion down for the most part between mid-October 24 to mid-January 25, all in the 990 zone. Now one further feature is that this week we are testing and even now breaching the bright green lower time currently at 1048 of the late December 24 to early April 25 bullish Andrews pitchfork, which in the past seemed good at showing the bullish angle of attack. However, this is no longer the case, and I may finesse this pattern to the unhighlighted bullish shift pitchfork for the same move, where we are right now in between the lower time below currently at 1003 and the middle time above currently at 1068. What is interesting about these two is that the bright green middle time crossed over the unhighlighted upper time in the middle of last week. It's that little circle you can see. Such a crossover usually invokes such actions, and they can be in any combination of these. So we can have a change in trend, a reinforcement of a trend, or just volatility. It seems from last week we have seen the start of a fresh move lower prompted by this crossover, so caution. I will still keep emphasizing how we are within the previously mentioned large July 24 to date rectangle pattern, admittedly a very large pattern, but one I think which is the core pattern here to watch. One other feature to be aware of, and that is something I have mentioned before, is that we have a monthly key reversal up for April, and all things should be seen in the shadow of this monthly pattern, including any attempts lower. Chicago soybean meal. The main recent pattern driver here in this market had been the May to October 2024 bearish shift pitchfork. The market has been running since mid-April over and along the upper time, currently at 289 even, something I've seen happen with pitchfork patterns in other markets. Despite the extended stay over the upper time, I had for the most part still regarded this as a breach rather than a break higher, until 2 weeks ago, and especially to Thursday last week. You see, 9 weeks ago I linked the recent highs into a bright red downtrend, currently at 298.60. Now this also tied in nicely for a while with the descending gold long moving average, currently at 305.30. That is still just above, shadowing the downtrend a little higher up. Plus the green short medium moving average, currently at 299.5, which is mixing it with prices. And in the most recent instance, the mauve medium moving average currently at 302.60, which earlier had failed to provide much resistance above, and now has energized itself as a resistance over the last 3 weeks. However, Thursday last week we had a clear close over the bright red downtrend, and Friday last week and the early part of this week the market had been trying to stabilize over this breached, possibly broken downtrend, and it really has only been the mauve medium moving average that has capped the market's rise. This breach on the upside, in my opinion, is yet to be called a break higher. Thus this impinges on my thoughts from 9 weeks ago as to whether the whole action this year has developed into a type of descending triangle pattern, possibly even a descending wedge pattern, with the bright red downtrend topside, sort of topside now, being the upper trend line, and the 290 even zone below as the base for the descending triangle, and the early January to date purple lower trend line, currently at 286.10, being the lower trend line for the descending wedge pattern. I think a lot will depend on any move down below 290 even to see if it will be descending triangle or a descending wedge pattern, or on any break above the mauve medium moving average, and ideally above the flatlining gold long moving average just above, which is at 305.30. My major concern is that the same as it has been now for 9 weeks, and it is, as I warned back then, and I quote, possible false breaks here out of this proposed descending triangle pattern, end of quote. Now, I'd previously left out there open and still live some targets on the downside for the earlier December 24 to early February 25 ascending triangle, and the head and shoulders top for the same move. The primary targets for both these were reached, but it still left open and alive the descending wedge pattern's secondary hard to reach target X1 down in the 265.60 zone, plus an interim target X4 in the 285.30 zone below for the head and shoulders top secondary target, and a harder to reach target X3 down in the 280.10 zone. These secondary and interim targets below had been much harder to reach, and I was thinking about retiring them. Indeed, I still am now. However, I will leave them alone for at least one more week and see how the market develops. I should also point out that we are today once again within the previously highlighted 282 even to 300 even congestion dating from between April to August 2020 and reprised back in August and November to December last year. Finally, this commentary would not be complete without my discussing the elephant in the room, or at least the elephant in the room which has stayed there throughout 2024 and also resonates now into 2025. And that is the annual key reversal here, seen here at the end of 2023. I said, and I'm afraid I have to repeat something I've highlighted now for 103 weeks, yes, over a century of weeks and coming up to nearly 2 years, and I quote, "I now only need to remind you once again of my words when I pointed out the Chicago soybean meal was about to have that rarest of patterns, an annual key reversal down. This duly came about at the end of 2023, and we have been living in the shadow of this pattern ever since." End of quote. I've also added ever since, and I quote, "If there is only one thing you take away from any of my musings, let it have been those words." End of quote. These last few weeks have shown that the shadow cast by that supremely significant pattern so long ago still darkens the skyline of this market. Chicago soybean oil. The main pattern here, despite a breach on the upside 2 weeks ago, is still the bright red, shallow, bullish shift pitch hawk for the mid-September to late December 2024 move. Prices this week are in between the overhead upper time, currently at 51.41, and the middle time below, currently at 46.30. However, a new pattern has emerged over the last few weeks, and one may be about to possibly kick off. It is the dark blue, possible ascending wedge pattern, currently 48.18 to 53.86. This has had the requisite number of touches on each side, but whilst I know we had closes back in early May below the significant 38.2% Fibonacci line of the March 20, April 22 move at 48.95, we have had none since, until possibly today. Last week and the week before were breaks below the important 38.2% Fibonacci line and helped cement this ascending wedge pattern, whilst the earlier ones, well, they would have built up to the original pattern. Thus, I will be paying special attention if we close today, and we're not doing it just yet, and close today and tomorrow below the 38.2% Fibonacci. And actually, I'll extend that to early next week. And whether we close below the dark blue lower uptrend, that's actually more important. Clear consecutive closes below this dark blue lower trend line, and I would feel obliged to lay out potentials and even possible targets below for this pattern. Something I'm not confident in doing just yet, as I fear a possible false break lower. I can only emphasize something I said only 2 weeks ago, and that was, and I quote, "It wouldn't surprise me to see some sell stops situated a short distance below this 38.2% Fibonacci line." End of quote. Well, I think today we have seen those sell stops being triggered once again.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.